We are going to start off the afternoon after Commissioner Murphy with Brian Korn, who is a partner at Manatt, Phelps, and Phillips. All right. And we're going to talk about crypto regulation and how it relates to crowdfunding.
Thanks, Vincent. Happy to be here. I think we sponsored that last 2 minutes you had. I don't know what that cost, but you're welcome. There was no food or anything. My name is Brian Korn. I'm a partner in the New York office of Manatt. We are a full-service law firm specializing in financial services, entertainment, and healthcare, among other industries. I'm, as I said, in New York. I focus on capital raising, crowdfunding, Reg A. Most of the Reg A I've done has been on the debt side. A lot of repeat issuers doing recurring debt transactions in the real estate space and in the small business funding space. Also, on the equity side, REIT formation and other equity structures using Reg A. And then public offering work. I was a former in-house lawyer at Citigroup and at Barclays. Earlier in my career, I was at Sidley Austin and Weil Gotshal. We're really happy to have this opportunity to kick off the afternoon leading into Commissioner Peirce's appearance. And I think it'll set the table nicely for hopefully what she has to say and everyone else. But within the crowdfunding world, there's been sort of a side detour into digital assets. And a lot of people are either pro-digital assets or they're anti-digital assets, or they're on the fence, or it's opportunistic. And one thing I've learned about being involved in digital assets is that it's really hard to do kind of part-time. The Twitter universe or the X universe in this space is extremely active. People trade ideas. Sometimes you read comments upon comments of postings. I'm looking at Robin in this house now in the crowd who puts out a weekly, but it's an intense amount of work. And at its core, there really hasn't been very much in the way of digital assets legislation. Most of digital assets is being applied to the rules we had pre-digital, which makes for some very awkward analogies and applications. And so we have a great panel who we're going to delve into kind of where we stand on digital assets, what the future will be of legislation and regulation, and where do we go from here. I'll ask Dina and then Julian to introduce themselves and give a quick bio.
Hello, it's good to see everyone. Thank you so much for having me today. I'm excited to speak to all of you, and this is kind of perfect because I was the lead staffer on most of the Jobs Act in the Senate, and I was with Senator Toomey at the time, but the securities lawyer who I was asking all the questions to was now SEC Commissioner Hester Peirce. She was sitting behind me, so you're going to hear from somebody much smarter than I am after this. But anyway, so I'm at Paul Hastings. We are a global law firm. Everything I say today is on behalf of myself and not Paul Hastings. I'm in the fintech practice, but I really help out our entire firm because I'm the only person that has, I worked on Capitol Hill, on the House Financial Services Committee and the Senate Banking Committee. I worked on, got started on bankruptcy reform originally. This is going to sound strange, but we were working on bankruptcy reform based off of a report that the lead person that was making the recommendations was essentially Elizabeth Warren. But I go all the way back to Graham Leach Bliley, eSign, Check 21, when we were having the same pain points with the internet. I was the lead staffer with most of the Jumpstart Our Business Startups Act. And I was in-house at Chrysler during 2008. Before that, I had done mostly consumer finance issues on the Hill and in Treasury. I was the Deputy Assistant Secretary for Consumer Affairs. So I went from subprime lending then into Chrysler to rescue Chrysler. I was in-house at Quicken Loans. And when I went to Paul Hastings, my first client actually, this was in 2017. And this is, you will see there's very much of an interconnection between, Reg A, Reg CF crowdfunding and Jobs Act and, the crypto space. But my first client was someone who had lobbied me on the Jobs Act. They were a registered ATS and broker-dealer that were trading digital assets as securities. And they were trying to they were trying to tokenize real world assets. It's a venue that sounds familiar now. We're now in 2025, and so I will sit here. My expertise is Congress, really policy development in Congress. I've worked a little bit on everything, so I know a little about everything and a lot about nothing. And I'll lastly say that one thing that you're really missing on my bio that's important is I have 4 kids. 3 of them are already adults and doing things in politics and college and stuff like that. They become more important than me. I've looked at my bank account. They are expert in terms of being in terms of what was I going to say? I always say they know how to get liquidity. They're certainly good at raising capital, exit strategies. I learn a lot from them, but none of them have a trust fund. So they got into the meme coin stuff. I watched because they're my biggest investments. But if they want to invest in a startup, they can. So even with online investing, that money doesn't go to startups.
But they know how to hit the Uber button and the DoorDash and Chipotle.
Yeah, so good afternoon. My name is Julian Haffner. I am also an attorney. My practice is primarily corporate. I operate generally as general counsel for a lot of my clients. I'm the first kind of legal look that they get when anything legal should pop up. As far as my background, I have extensive entertainment practice. I've represented quite a few athletes in NBA, NFL, and also Olympians, and quite a few musicians. And a bit of some film in there as well. So what's more appropriate today is that I'm also wearing my hat as a CLO for a Reg CF platform called Cineblock Films, which is kind of representative of my practice in the sense that it sits at the intersection of some of the issues that we're going to be talking about today, entertainment and access to capital, which is something that I also am very I'm passionate about. And the way that we kind of came to this idea was that some friends from college of mine, we kind of came at this problem from different perspectives. As I mentioned, I had a background representing filmmakers, always often acting as production counsel, and also kind of advising on capital. And one of the issues that we kept running up against was how difficult it was to raise capital for these projects in ways that made sense, that were efficient. At the same time, I had another friend who was coming at this project, who had just come off a film project, who was he was a bit miffed, I'd say, about the process of producing the film, and wanted to think about ways that we could be a little bit more efficient and actually create solutions for filmmakers. So Cineblock was born, and in its inception, Cineblock was we created that about 2019, 2020. We were digital blockchain adherence from the start, right? So we were trying intentionally leaning into the technology piece and wanting to build something that was compliant from the start. We were coming out of the ICO kind of debacle of 2017 and knew that as an attorney that's something we wanted to steer clear from, and that to the extent we're going to build something, we want to do it in a compliant way from the start, and that's kind of been our ethos from the inception till now. So yes, I'm very excited about the potential and the possibility of where we are in the space and what regulatorily the signals seem to be pointing in positive directions. So I think we're in a really good space at a really good time.
So and those are great intros, and that'll lead to our discussion. I think in the digital world, with the SEC at least, and somewhat with state regulators, we've seen 3 eras: the Jay Clayton era, the Gary Gensler era, and now the Paul Atkins era. With Clayton, you had uncertainty over what was a security. There was an attempt to do a little bit of guidance through speeches and other statements. We learned that Bitcoin and Ethereum were not securities, but everything else could be a security. Proceed with caution. And that SAFS, so Simple Agreement for Future Token, which was an extension of the SAFE created by Y Combinator, the Simple Agreement for Future Equity, the sort of 2-page subscription document that everybody loves, was problematic because the version of the SAF that went around that Chairman Clayton reviewed did not have any obligation for the company to actually produce a token. It just said, if there is a token launch, you have subscribed for one, nor was there an obligation to return the money if there was no token launch. And so he said, this is a pretty clear pathway to fraud. Under Gary Gensler, we had a tighter shift towards implying that almost everything is a security because it failed the Howey test or passed the Howey test in that it was an investment contract made using with an expectation of profit in a common enterprise that is based on the efforts of others. And you could think about almost anything that you invest in, including non-securities, artwork, theater tickets, anything, baseball cards. All of that has some, whether a signed baseball accrues in value or not is really based on the efforts of the player whose career might do better. And then now we had, and we had a lot of enforcement cases brought up against virtually every platform. And the refrain coming from the platforms was, well, we're happy to be broker dealers. If you think we should be a broker dealer, where's the form? And we'll fill out the form. And then there was a long wait to get approved as a broker dealer. And ultimately, very few of them actually had the resources to go through that process or make it through. And then under Paul Atkins and President Trump more broadly, we've had more liberalization of what is and is not in scope. We've seen a lot of enforcement cases dropped against some of the parties that were sued in the Gensler era. But there has been a little bit of slowness in terms of actual clarity around what the rules are and how to proceed, other than people think, well, there seems to be now a clear divide between non-securities and securities, and who regulates the non-securities? Probably the CFTC, although that agency hasn't really done much in terms of addressing things or being clear. I'll ask you, Dina, just in terms of, are we in a situation now where you can advise clients that if they want to launch a token, that there's a clear path to doing so and kind of a third rail to stay away from? Or are we still in sort of a cautious phase?
So as you know, I don't practice the securities law in the traditional sense. So as I gain in terms of something like that is by listening to the other attorneys throughout my firm. And I think there is not 100% clarity. I know I'm saying clarity, which is the legislative term, right? So there's not 100% clarity, but I think there's more of a comfort level to move forward because of the administration's position, which has been very, very favorably inclined toward crypto. And it's always been in the calls that I've been in, from the get-go, it's always been sort of a risk tolerance type of thing, and how much you give the client options in terms of how much risk they want to take. And there's definitely things have become a little bit less risky, is what I would say.
Julian, just your thought on the environment now.
Yeah, I was going to agree that wearing my lawyer hat and not my CLO hat, that there are encouraging signs coming from Washington that I think are encouraging folks who are not scared by the risk to jump in. I'm finding a lot more interest in the space. I'm fielding a lot more questions about what is or isn't possible. So yeah, I think that generally speaking, the signals and signs that we're getting are encouraging, and I think that the space is growing as a result.
So just looking at the legislation, the leading legislative fix for blockchain, it looks like we're in an environment, at least, that there aren't going to be a ton of bills passed, right? Obviously, the government's shut down, but even putting that aside, the space that it needs for getting through usually is tied to being part of another bill, or maybe there'll be a pocket where you can get both sides to agree. We had a law passed, the Genius Act, earlier this year, was signed into law, and it basically allowed the stablecoin community to move forward under greater clarity. With respect to the Clarity Act, I'll just talk a little bit for those who aren't familiar. It was passed by the House in July. It classifies digital assets into digital commodities, investment contract assets, permitted payment stablecoins, and there's going to be an exemption for token offerings. Issuers organized in the United States can raise up to $75 million in a 12-month period via token sales without full registration. So it's sort of similar to a Reg A for tokens, although unclear whether the SEC rulemaking is going to allow for a review process similar to Reg A, where you could have an SEC style or an IPO style comment letter that lasts for months. What do you think about just the Genius Act, the Clarity Act, what you hear about their progress, and what are the main obstacles? And then I guess ultimately for Julian, is it actually going to solve any problems or just create more?
So, I mean, the Genius Act was, clearly a huge achievement. Stable coins are obviously, a major potential in terms of use case is, new payments rails that are, faster, more efficient remittances, when you talk about digital assets. So the Genius Act was, something that even I was surprised that it was able to get through with bipartisan support. We are seeing a lot of applications, to get approvals through the OCC and things like that. It's going to take some time for the Genius Act to be implemented, so there's still some uncertainty, but it's a very important signal to get that done. It also makes the dollar much more available in terms as a stable coin around the world. So it sort of is a way to protect the dollar as the reserve currency for those who've been worried about other digital assets. So it's going to take some time to implement the Genius Act. There are a little bit of bumps in the road in terms of the Genius Act. There have been concerns, obviously, from the banks about people being able to get interest on their stable coins. The language they feel is unclear, so they want that reopened. So that's a little bit of a tricky thing. There's been a little bit of a battle between I would say the traditional banks and the crypto native types. But Genius Act is a pretty big achievement for Congress in terms of, you want me to talk about clarity?
Well, just so we've had versions of the Genius Act and the Clarity. You had Loomis, Gillibrand in the past Congresses. You've had a lot of attempts. These bills come out, everyone gets excited. We write client alerts, and then the year ends and nothing happens.
Yeah.
What it looks like we're headed in that direction, but give you your
Okay.
perspective. Yeah.
Yeah. So, first of all, I want to say, a lot of people when it comes to Congress, they'll say, well, I don't really need to watch it. Nothing's happening. Nothing's going to happen. Blah, blah, blah. Well, first of all, I'm very numb to this shutdown is what I'm going to say. I shouldn't be numb to it because I am, because I came to Capitol Hill the first time we had the long government shutdown when Newt Gingrich was Speaker of the House. I was an intern in a Maryland office, and you can imagine, I did not have off with the level of people who weren't working it was like. But regardless, no matter what, a lot of people that haven't worked in Congress, even a lot of lawyers, they don't understand that there's very much an interconnection between Congress and the agencies. And so the movements in Congress, even if they don't get something done, a lot of times it can impact the other agencies. A lot of times there's coordination back and forth. When you're on Capitol Hill, you're regularly working with the agencies, congressional affairs, but also the leadership at the agencies. So it's always important to watch the movements in Congress. And when I say watch the movements for this crowd, there have been, I know some of these issues overlap, but there have been efforts in terms of what we call capital formation, which I know in a lot of in the digital asset space is also, part of it is also digital capital formation. So there's those bills you want to watch, like on, accredited investor and all those other provisions on the capital formation side. But at the same time, Clarity Act, it is a much more complicated piece of legislation than the Genius Act was. And the shutdown affects things in terms of when things are more contentious on Capitol Hill, it gets a little bit harder to get agreement to happen. And as you can see, the House doesn't need to pass anything right now, but the Senate right now, it's just been all about trying to get the government running again. So it takes, more time. That being said, there are discussions ongoing. They were happening today on Clarity Act. There are barriers on the Clarity Act. So the group of Democrats that supported the Genius Act, the magic number in the Senate, that group of Democrats has a list of concerns that really are tied to DeFi and would undermine sort of the concepts behind DeFi. And so there are discussions ongoing. But again, you always have to get to that 60. So, even if you're in that room and, Senator Gillibrand is really the lead Democrat who's negotiating with the, Loomis, who's the lead Republican, and others in the room, you still got to make sure you get to 60, right? Because even if you get to that 60, even if you get an agreement in the room, if all of a sudden others come out and say, well, we're not for it, and you don't have the 60, you still can't move forward in the Senate. So it's a complicated bill. That being said, as those movements happen, and you'll hear more about this from others who are in the SEC, but even maybe when Commissioner Peirce is here, those movements influence the SEC. And I'm forgetting here that also the Agriculture Committee plays a role in all of this, and because of the CFTC, and the Agriculture Committee hasn't even put their piece of the market structure bill out there, right? Because it's all about what something is a security or a commodity or what, how we're going to characterize it, how we're going to regulate it. I mean, the SEC has a great deal of authority to move on its own, which others could talk to more than I could. But, the reason the Jobs Act happened was because we couldn't get the SEC to do. We were talking to the SEC saying, hey, raise the shareholder limit. We couldn't get them to do it, right? The SEC can do a lot without Congress. The benefit of the SEC is the flexibility, right? The benefit of, Congress doing something is, so the SEC can do a bunch of things, right? But then if you have a different type of chairman, like the last chairman, for instance, that could be, undone. If Congress does something, you have the benefit of at least having something in statute, right? And it being, permanent. But you can also have it where it's too rigid and it makes it can be so rigid that the law doesn't work very well. So in terms of whether it will pass or not, I would say it will be very difficult. That doesn't mean it's not meaningful. That doesn't mean it doesn't set precedent for the agencies or set precedent for the next Congress. But the closer we get to the elections, and we are in the election cycle for the midterms now, it gets harder and harder to get things done.
I think, then I'll let you go, Julian, but I think what's also important to remember is that the chief weapon against a lot of the industry is the Howey test. And if you're under Howey, then you're a security. And if you're security, then follow Reg A, Reg CF, Reg D. Most domestic issuers follow Reg D, or they go offshore and they form an offshore foundation. And under Reg S, you can issue to anyone you want as long as they're not a U.S. person. You don't make directed selling efforts. And you have immediate liquidity. The problem with Reg D has always been it's limited to accredited investors primarily, and you have this 1-year hold period. And so most of the token issuers said, I want this thing listed on Coinbase or CoinList or Sushi Swap or Uniswap right now, and it needs to be liquid, and I don't have time to wait a year, and I don't have time to only get the credits because I have an affinity group that's not accredited. See a lot in the music business, music royalty funds that we form, they want access to the non-accredited people, the fans, and it's very hard to do a deal that's fully for creds. And sometimes you do, but it's interesting. But the Howey test is a 1946 U.S. Supreme Court case, and actually the SEC can't really overturn Howey, and neither can lower courts. Even though it's from 1946 and just past World War II, and it dealt with something totally different than Orange Grove cooperatives and not digital tokens. Still the law of the land, still respected. There's a companion case called Reeves, which deals with debt, Reeves versus Ernst & Young in 1990. Those are still the leading cases on whether something is a security on the equity or debt side. And it would be an act of Congress that could overturn a case, just like the Dobbs decision for abortion overturned Roe v. Wade. I'm sorry, that was another case. But you could have a legislative change in Congress that overturns the U.S. Supreme Court. Not sure we're going to see that and that level of agreement.
And I wanted to say, I should, especially in front of this crowd, yes, the SEC can do a lot of things in terms of capital formation that were not done in the Jobs Act, but the reality is the Jobs Act was the first time that we allowed retail investors, for the most part, to invest in startups, right, through CfPA or Reg A. And there is always this fear of, and some paternalism in terms of retail investors investing in startups. And even an SEC chair can have some fear because if a lot of people lose money, that retail, then they all complain to Congress, and they get hauled up to the hill. So I would say that Reg CF and Reg A are still they're important because Reg CF there's some established precedent for it and experience for it. And when it comes to when we talk about tokenization and fractionalizing things, you all probably know better. Reg CF lends itself well to something like that. So I think that these laws that have passed, they give some structure and comfort. And so I think that you all have a lot of opportunity and should continue to take that opportunity.
So Dina essentially stole my thunder. That's exactly where I was going with it. That while the Clarity Act is not necessarily directly affecting our business as Reg CF platforms, it does send a strong signal that this ecosystem is growing and growing in ways that I think can benefit issuers, investors, and platforms as well. And to your point, Reg CF has provided us with a structure I think that works in large part, right, in the sense that it addresses the investor protection pieces while also at the same time allowing for, depending on one's perspective, meaningful capital formation, right, in ways that wasn't quite available beforehand. And I think it's only going to grow. And kind of bringing it back full circle to this panel, I think digital assets are going to play a key role in expanding that capital formation, the ability of retail investors and small businesses to really play in this area here. So again, while not necessarily directly impacting our business, it is an encouraging signal and one that we're very happy about.
So Julian, let me ask you, in the athlete space, we had registered income stream offerings pre-digital. So like, Fantex, a lot of people remember they were a registered broker-dealer. They did athlete IPOs through an S1. It cost them $1 million to put up a BD, and then they had to form an alternative trading system to allow themselves to have these shares traded. And they did 2 or 3 deals with some NFL players, and there was no liquidity because somebody wanted to bid $32, somebody wanted to bid $8, and the ask was $32. And there's no specialist market. There's no volume that really drove that. What is it about digital assets that's attractive to your clients when you talk to them about engaging in that space versus the traditional security space?
Yeah, so I think the digital asset piece is exciting to some of our issuers, largely because it widens the pool, right? It allows for a lot more participation in these projects. And at the same time, it offers the promise of a liquidity, even though we haven't quite met that promise. So I think it's more perspective excitement as opposed to like what's happening today. But on the Reg CF side, what we see more kind of excitement about is given our client and customer base, is the ability to leverage the fandom, the ability to leverage the following, the ability to leverage the interest and excitement around content, right? Because content at the end of the day is emotional. And people tap into that emotion, but people haven't quite figured out how to leverage that emotion in ways that can allow them to continue to make more content, allow them to raise the capital that's necessary. So I think that's really Reg CF's kind of general appeal to our client base, is the ability to leverage that which they've spent careers building in ways that they haven't necessarily been able to monetize. And on the investment side, obviously being able to tap into the content that emotionally moves them and have the potential to actually economically benefit from that participation. So by and large, we're very sanguine on this area, this space. And all the signals coming from Congress are quite positive. And that if you were to kind of compare that to what we saw prior, which was a lot of kind of dubiousness around it, right, around the space, and it wasn't quite clear that the space had the legs to actually survive. So it appears that we're on the precipice of something quite exciting.
I mean, I think in the Reg CF space, if you had the limits raised and if you broaden the ability to use funding vehicles as opposed to pure operating businesses, it would be more useful. When I talk to clients, I say, well, you can use Reg A. Yes, there's an SEC review, but there's no need to have a broker-dealer, which is attractive to some of them that want to sell it off their own website. You can rinse and repeat. I mean, there's a company out there, Masterworks, which I'm sure you've all seen. They do fractional ownership of artwork, and they've done over 250 Reg A offerings. Each of those offerings can go up to $75 million. So you have this small offering exemption, and you could raise billions of dollars using this $75 million cap, as long as you're able to rinse and repeat and get more investors into each portal. Do we have any questions? Scott McIntyre.
Yeah. So we are at the phase now where we haven't actually launched any of our projects on Cineblock, but we have a amazing kind of pipeline of projects that I think, and part of our approach too, because as the operators in the space know, marketing is a key piece of the business, right? And to the extent that one hasn't figured out how to market, you're only playing, you're not playing at full capacity. So to your point, I think especially given what we do and kind of the high profile content that we have access to, yeah, that's a key piece of our approach going forward. And I think that generally the excitement that's going to be created around some of the projects is going to the entire space. So yeah, we're on it.
Question? So the question was, if you get an ATS approved, there's still a lot of issues. That is true. So, for those of you who don't know, the ATS is an add-on designation. Once you're a registered broker-dealer, which is not easy to do, but you can do it through FINRA and through an SEC concurrence. And then you have the alternative trading system application, which is added on to that, which requires you to be a qualified custodian, if I'm not mistaken, which means you need to have additional capital requirements and record keeping and all that. There is a little bit of a gap in terms of how they are regulated. There's a traditional ATS regulatory space within FINRA where you'll have a cycle exam once a year, and then you'll have for cause audits or other exams. But at the same time, on the digital asset side, it's very difficult to track a lot of this stuff. Trading, tax, IRS is also extremely interested in digital assets. The tax people had a free ride for about the first 5 years of crypto, where no token transactions were tracked. And then for a while, as long as you never came out of cash, your transactions weren't tracked either by the IRS. So you could trade token for token as long as none of the pairs involved cash. It was impossible for somebody to really track whether you had a gain or loss or what your basis was. That is slowly catching up, but kind of everyone's sitting around still wondering whether there'll be any real issues there. But again, yeah, there needs to be more clarity. I think the SEC has formed this crypto task force, and one of the parts of that within the Division of Markets is adding greater clarity. If we're going to allow more brokers and more ATSs, there has to be more clarity of regulation. The backstop, of course, is this is the regulatory environment. We already have rules in place. Please comply with them. And we understand you don't like them or you don't think that they apply to your assets, but that's something to deal with. Also, you should think about states too. The states are open. State regulators have been very active, especially California and New York in this space. Many are adopting these crypto and digital licenses, and California just adopted one. New York's had one for a while. Very hard to get to, probably only 25 licensees in the state of New York. That's an important issue too, and money transmission laws. We are at time, so I'll have to leave it there. Thank everybody thanks everyone for listening. Thanks to my panelists. Great job, and we'll take it back
Thank
to
you all.
Vincent.
Wonderful panel. Thank you.